Hello, hello, hello. Welcome, friends. How are you? How are you? Give me a little wave in my window so I can see you're there. Welcome in. Wacky Wednesday. How about that? We're making it. We're halfway through, guys. We are hitting our stride and we are ready to roll on into this programming. Thank you so much for being here. You know what? I just got to give a shout out. Yeah, good to see you. I want to give a shout out to the MBAC team. We have the jazziest opening for our programs ever, right? Sharon is a wonder, and I just love my team and working with Kim. You guys should have as much fun as we have when you go to work every day. So without further ado, we want to talk about what we came here to talk about today. We came here to talk about capitalization strategies for your business with the overlay of how does this factor into government contracting. When you go into government contracting, listen, you should have capacity to handle the workload that you said you can handle. A lot of times going into capacity means that you've got the financial resources, you've got the insurance and the bonding levels that you need, not only to compete, but to keep that bid. And this dovetails so perfectly into where we're going towards the end of the week when we talk about subcontracting and joint ventures. Really, its program is just coming together brilliantly. So I thank all of our partners for participating. And I thank all of our support people that are paying attention to what we're saying and making sure that we're holding to the facts and giving you the right information. So enough about what I have to say this morning. Again, thank you for being here. We have some of our panelists that are in the room that are ready for us. Miss Sandra Moody Gresham, which is here, and she's going to talk to us about bonding and insurance and those important elements. She's going to give us a few slides. Then we're going to roll into our representation from Mr. Andre Connor, State of Ohio, DAS, and he's going to talk to us about those programs offered at the state level and how that fits with your certification. And I see Mr. Johnson has just popped in, so happy to see you. He is from ECDI, and he's going to talk to us about some of the loan and programs that they have available and the services that they offer. So without further ado, I've taken up 5 minutes and I need to give that time back. I'm going to roll right into our programming and open with Ms. Sandra Moody Gresham. We're going to give her hosting ability. Oh, and guys, put your questions in the chat for me. I will keep track of them, and then we'll do a Q&A at the end of the program. All right? Thumbs up that you're in agreement with what we're going to do today. Yeah. I see you. I love you. Thank you. Sandra, are you ready, sis?
Yes. Good morning.
All right, take it away.
Good morning, everybody. And thank you, Kim, Sharon, Jeanette for inviting me over this morning to talk about what I think is always insurance, exciting insurance and bonding. Most people think insurance is kind of boring, which it is. After 30 years, I could say that. But the reality is everybody got to have it. So that's what makes it exciting, because I market a product everybody needs. So I'm going to talk, in the being concerned and mindful of time. I'm going to kind of stay focused on our objective to really give you guys some information on key fundamentals of insurance and bonding that you need as a business owner. And certainly if you're going after municipal or government contracts. Can everybody see my slide okay? You guys can see the slides?
Yep,
okay, great. Good. So just a quick background on myself. I own DeHaan Enterprises Insurance and Financial Services. We're just right on the east side near Main Street and Parsons Avenue. So we're an all lines insurance agency. So we do business insurance, not only property and casualty that we'll talk about today, but also employee benefits, surety and contract bonds, and then we do personal lines of insurance as well. But more than that, like many of you, I am a certified minority business, MBE. I'm an EDGE certified and also WBE certified. So we've gone after many of these state contracts. We've been fortunate to do work with the city of Columbus, the state, the airport. So I've kind of sat in your shoes and kind of understand some of the challenges pursuing that. But you really got to be mindful first. Is this a market you want to play in, right? So do they buy the products or services that you sell? And then if so, if I'm really going to play in this space, make sure that I've got the fundamentals, I understand their systems and process so that it's a profitable venture for you. So and one of those things is around insurance. So the slide that you're looking at here is these are the primary coverages that are asked for, and mostly any business needs really for you to protect yourself, your company, and your customers. That's what insurance is designed to do. So obviously we don't have time to drill down in each of these, but just to kind of give you a broad overview of what each of them provides. The general liability and umbrella. Whenever you hear the word liability, it means like lawsuit coverage, right? So this pays for your customers primarily. If your customer is harmed or somebody's property is damaged in the course of you carrying out your business. $1 million on general liability is baseline, and an umbrella sits in excess of that. So you may have a 2 million, 3 million. We're seeing contract owners ask for 5 million. So depending on who you're working with, they're going to determine those limits of liability that you need. Professional liability is for those, it's also called errors and omissions, malpractice. These are coverages for those who provide design, counsel, engineers, consultants require it, insurance professionals like myself. That's that space if you're doing more design and consultative work. Employer liability or employer coverages. If you have employees, these coverages are necessary. As Ohio, our workers' comp is managed by the state of Ohio. So you should secure that through the Ohio Bureau of Workers' Compensation. But if you have employees who work in Michigan, who live in Michigan or Indiana, then you have to purchase workers' comp through your insurance company. In Ohio also, because we have a state-run work comp program, you would pick up what's called employer's liability or Ohio stopgap, which protects you from any lawsuits relevant to workers' comp. The first one there I do want to mention, employment practice liability. This protects employers from any employment-related losses or suits. The sexual harassment, ageism, sexism, wrongful termination. Your contract owner is not going to require you to have that, but it's advisable you have it to protect your business. Property insurance, obviously anything physical property, the real estate, as well as the personal property, which is furniture or anything that's movable or transferable. So think about if you take your products, your inventory, your equipment to a job site. You want to make sure that your insurance extends wherever that property is. And the last one there you have is cyber data breach coverage. Almost every business needs it now because we're working more remotely. There's been an increase in cyber liability claims. So carriers are getting a little cautious. So they're requiring a little bit more protection and device security that you may have in place to attain that coverage. But you have to start looking at it as a staple coverage that you want to pick up. So minimally, having general liability, getting your umbrella coverage, that Ohio stopgap is a common coverage we see required. And the other one, what I don't have on here that fits under property is the hired non-owned auto. That is if your business, your employees or yourself use your personal vehicle in business use. That could be simply your employee is dropping a package off at a customer's or to the post office, or you going to the bank. So then your business insurance now extends on top of your personal auto policy. That's a common coverage that's required when you're doing larger contracts and municipal work. And I know I'm going kind of fast, but I want to be respectful of the time. Bonding. So what is bonding? It is different than insurance. But what it is a 3-part relationship. between the organization, the entity who owns the contract. So they're the obligee, you as the business owner who's seeking the contract, and then the surety company, or which is the same as an insurance company. So the bond really assures that you will complete the contract and all the terms of the contract. That means paying suppliers, paying subcontractors, finish it on time based on those requirements and specifications of the contract. If you fail to do that, the contract owner can call your bond, and essentially it's a default on the bond, and the surety company steps in to complete that work, finds another contractor, gives the money to the obligee to get that job completed. You as a principal have to indemnify the insurance company. In other words, you have to pay them or reimburse them for any costs they put out because of your failure to complete the contract. So, it's the kind of thing where that's why the underwriting process is a little more challenging. Like, you can't just call up and say, I need a bid bond, a performance bond, without providing an application and some details to get that secured. So the best analogy is kind of like a co-signer is really what you're doing, where the surety company kind of co-signs your work, and they want to verify that you had a capacity, you have the cash flow and the wherewithal to get that job and contract completed. So there are a lot of different kinds of bonds. Contract bonds are the primary type of bonds that when you're going after municipal work, the bid bond is usually 10% of the project amount. So if you're going after $1 million job, the bid bond required maybe 100,000 or 10%. And that just says, it's kind of like earnest money that says, if you win this, you're going to provide the other required bonds and fulfill that contract. In the performance payment, supply and maintenance bonds, just says you're going to perform it, you're going to pay all of the subcontractors and suppliers relevant to that job. And then a maintenance bond is after completion. There may be a warranty on that work going forward. So the bond stays on the project. It's project specific, and it stays on that project until completion or after the warranty. So the owner or a subcontractor that you fail to pay a year later can still call on your bond if you haven't taken care of them appropriately. Then there's other bonds. If you're a contractor and every municipality around Franklin County has a license or permit bond. These don't require as much underwriting or scrutiny. They're usually a couple $100 a year. And it just guarantees if you take a resident's money and you don't do the work, they can file claim against that $10,000, $20,000 bond you have with that municipality. So again, there's a variety of bonds depending on what the work that you're doing and what you're seeking. There's some bond programs that for small contractors is just based on credit. Right, so there's a couple of sureties. We represent a lot of different surety companies. And so what we try to do is when you reach out for a bond, we try to submit your information to multiple surety companies to see how they will evaluate it. So our goal is to get you the maximum bond capacity. So the goal is to get you what's called a bond line, similarly to a credit line, if you're going to be doing bonded projects often. So we have a couple small bond programs where anything under $400,000 projects is just based on your credit. And again, you can do up to $800,000 on that carrier's program. And then people who want bonds just sporadically, there are other bond programs that'll go up to $250,000. And again, it's based on credit and couple page application. However, when you want to go past, $400,000, $500,000, higher limits, you have to submit a complete application, and you can see the information that's needed there. If you don't have a line of credit, we would encourage you to get one established. And that is something that is often and favorably looked at by the surety companies. You don't have to have accountant prepared financial statements for the projects under 400,000. So you can use in-house financials for those. But again, the larger the projects you do and the larger the bond size you want, then you need more data. The last bullet I think is important to explain, the general indemnity agreement. This is where you pledge your personal and corporate assets to back that bond. If you're married, spouses also have to sign the indemnity agreement. Now, there's often challenge around that, where spouses are like, well, I'm not associated with the business. I have nothing to do with the business. I don't want to sign the indemnity agreement. The bond cannot be issued without that spouse's signature if you are married. And that's because there's likely joint assets. And because you have to reimburse the surety company if there's a default, any assets that you have by signing that indemnity agreement, you're saying you're pledging those assets to back that bond if there's a problem. So we've seen some situations where that spouse said they're not signing it, and the bond could not be released. And that's not unique to our surety companies. That's just pretty much a standard in the industry. So quickly, these are some of the red flags that could hamper you from securing a bond. And I would encourage you, if you know you're going to play in this space, to do your homework. Take a look at your credit report, see what's on there. If you've got some outstanding debt that can be addressed, start working and positioning your business and your personal financial situation so that you can secure these opportunities and move forward. So tax liens is always a problem, and certainly any past bond defaults is a problem. So we are, as I said, the Hahn Enterprises. We do all lines of insurance that's stated there. My contact information is there. And so we're here to help and answer any questions we can. So wish you guys success, and thank you for inviting me to share.
Sandra, you're so awesome, and you dropped a lot of information in a short period of time. I know there's questions for you, but we're going to ask that those questions are held to the end. And now we're going to roll into the presentation from DAS, Mr. Andre Connor. You now have co-hosting ability, so take it away, sir.
Good morning, everyone. Thank you. First of all, thank you guys for having me. My name is Andre Connor. Just want to give you a quick background about myself. I want to be cautious of the time. I am the Business Solutions Manager here for the Minority Division at DSA. I've been in this position full-time for about 2 months. I've been with the state for 6 years, and before that, I was in banking for about 21 years. And most of my experience is in underwriting, business banking, commercial, agriculture, and SBA loans. So that's my background. Today, I wanted to talk to you about some programs that we have over at DSA. Two of the main programs that I want to talk to you about. Let me see how I can share my, how do I share my material here. Let's see. Trying to see how can I share my screen.
You should have a share screen button at the bottom, hun, and I've made you a co-host.
Okay.
If you scroll towards the bottom, you see a little green flag in the middle.
There we go. There we go. Let me see it here. Okay. Let me get my. Can everyone see?
Looks good.
Okay, great. Okay, what I wanted to talk to you about, two of our main programs that I wanted to talk to you about today was our Minority Business Bonding Program and our Minority Direct Loan Program. Our Minority Business Bonding Program is, these are guaranteed and performance bonds that we have for certified minority business customers who are looking for getting those contract opportunities with private, local, state, and federal entities. Our bonding lines can go up to $1 million. We can go out for 1 year with the possibility of renewal. I like the fact that there's just a 2% premium on each bond request on approval line. There is no application fee. That's one thing that I really do like to tell customers, that there's no application fee and there's no job retention. There's no job retention. There is a line of credit that is required for all of our bond requests, and most of our bond requests, they take about 60 to 45 days for approval. I normally prepare a bond application and I have a list of other materials that are needed so I can get the underwriting process started. And of course, everything is subject to approval. They go through our Minority Development Finance Advisory Board every month. And also they have to go through our state controlling for that final approval. Our bonding opportunities is pretty much for our, general and primary contractors. The great thing about these, you can bid on more than one project at a time. I know right now I got a current customer. He has a bond for $750,000, and he has about at least 5 or 6 bid requests out there. So that's good. I like to see him taking full advantage of that bond, just bidding on multiple projects. And also after 12 months, you have the opportunity, again, like I said, to renew. And also there are opportunities to increase that line of credit. And like I said before, the maximum that we will go is up to $1 million on those bonds. I think right now in our current portfolio, we have about $10 million set aside for bonding customers, and there are funds out there available. There are definitely funds out there available. So if you guys have some customers who need some of those opportunities, the money is sitting there waiting to be used. So definitely give me a call, and I can walk you guys through your program, and I can walk any customer or anybody through that program. Some of our ideal customers, construction, manufacturing, providers of goods and services. They want you to have at least 1 year of experience, completing contracts, access to working capitals, planning on bid contracts within 60 to 90 days. So there's no need to wait till the last minute. If you know way ahead of time that someone's going to need a bond out there up to at least 3 months, give me a call. Let's get the process started right away. And like I said, tax returns and financials need to be current when I send out those financial packages to come back to me. Our next program that I wanted to talk to you about was our Minority Business Direct program. This program is more like a traditional loan program that you would see at a bank, purchasing land, building renovations, machinery and equipment. We will finance up to 75% of projects. Normal customers, we are in a joint collaboration, normally with another financial institute. And normal equity injection, the minimum equity injection has to be a minimum of 10% from our customers. We'll do a minimum loan of $45,000, and we'll do a maximum loan up to $1.5 million. We have a really good interest rate, which is sitting there at 3%, 3% interest rate, and that's pretty good compared to what we have out there from a lot of banks. Our terms, one thing I like, as far as on equipment and machinery, we can go out to 10 years. Typical, most banks will only let you go out to 5 to 7 years. So that extra 5 to 3 years that we can go out, that really can help a customer as far as having cash on hand and helping them with their cash flow coverage. And on real estate, we can go up to 15 years. We normally, when we do involve real estate, we're normally in a shared first when we collaborate with the bank, or we're in a second mortgage position. There is some job retention as it relates to the Minority Direct program. And also there is a $300 application fee, and there is a commitment fee of 1.5% of the actual loan amount. And again, this same as the Minority Bonding program, This loan is subject to approval. We have to go through state controlling, and it has to go through our minority financial advisory board. Again, these are some of the highlights that I went over as far as the interest rate and the terms as it relates to property. All property that any customer is looking to purchase, of course, that has to be owner-occupied property. They're not going to do any type of investment at this time. Ideal customers, construction, manufacturing, goods and services. Like, again, once again, purchasing property for owner-occupied use and equipment. And of course, highlight again, repayment is based on historical and projections as far as cash flow. With those two programs, I just wanted to go over those two programs real quick, just to give some other speakers some time to talk and have a nice Q&A session. But if anyone has any questions or anything, I want to go back up to the very front. This is my contact information. There's my email address and my phone number. Please give me a call at any time, and we can just have a one-on-one. And I'm here to help. Thank you very much for your time.
Andre, that was awesome. And I know, again, we're going through a lot of information very quickly, but what's important here is that now, if you didn't know, there's a point person that you can go to for some of this information. And I am looking forward to a very healthy and vigorous Q&A towards the bottom of our program. So thank you so much. Mr. Johnson, how are you? Are you there? ECDI, are you there? Can you unmute for me?
I am here. I'm sorry. Yes, I'm here. How you guys
There
doing?
you are. Oh, good, good, good. So happy to have you here. I'm going to let you introduce yourself. You now have co-hosting ability. So if you have slides to share, feel free to do so. If not, well, then just talk to us about what you guys have to offer.
Okay. Hey, good morning, everyone. My name is Kenneth Johnson. I'm with ECDI, Economic Community Development Institute. Pretty much what ECDI is a community development financial institution. And what we do is small business loans within the state of Ohio. We've been around for about 15 years. If I'm not mistaken, I've been here for about 7. I've been in the industry probably for about 18 or so. Our loans range from anywhere from about 500 to a max loan of about 350. I'm going to go over some of our loan programs. If you guys do have any questions, feel free to contact me via email. That's at kjohnson@ecdi.org. I'm actually going to type that in here. That's my contact information. Feel free to contact me if you have any questions outside of the call today, okay? Now, I've never shared my screen before, so bear with me. What do you? Can you see that?
Not, oh, there you go. Yep. Good deal.
Okay, so we're going to start talking about some of the loan programs that we have here at ECDI. The first program I'm going to talk about is what we call as a rebound loan. Okay, it's for some current ECDI clients and some new clients. So this loan is pretty much for working capital. It's normally to bridge the gap during this pandemic that we're going through. It's a 66-month term, okay? It's 6% interest on the loan. 66 months is 5.5 years too, by the way. So you'll get there's no interest only on this loan, and it's located only in Central Ohio right now. So Franklin County in the city of Columbus. So new clients can get up to $20,000, existing clients can get up to $50,000. Our next loan would be called our Community Advantage Loan. This is pretty much an SBA-backed loan. This loan can go from anywhere from $50,000 to $250,000. It could be used for pretty much anything: working capital, equipment, leasehold improvements, pretty much anything that you're going to need for the business. The length of the term is a 10-year term. The interest rate is prime plus 6, and the packaging fees are listed here at about $2,500 is the most. Now, I do want you to know on all of our closing costs and fees, all our loans are net funded. So depending on what you're asking for as far as the loan amount, we pretty much bridge or pretty much add that into the loan amount. That way you'll be net funded for what you asked for. So the closing costs are net funded. You really don't bring anything to the table to close a loan with ECDI anymore, okay? Then we have our microloan programs. They go up to about $350,000. The max term on that is about 66 months. Also, we start on the microloans anywhere from 500, as low as 500, but they go up to about 350. And those also are net funded. Interest rate on those do vary between 7.5 to 12.5, but it is a fixed interest rate, okay? And then we have our scored loans pretty much, which is up to 20,000, same term, 66 months. In some of the eligibility requirements, you will see that we ask for a 590 credit score. I will tell you that is not the end all be all of the program. I have done loans and done many loans for clients under 590. So that do not hesitate to apply. And if you have any questions about that, feel free to give me a call. And the last loan that we offer is pretty much for anybody, you know, MBE, minority business, EDGE certified, women business enterprise. We pretty much have a loan which is called a capitalization loan. It's up to $350,000. The term on that is a contract term, so it's based on the contract that you may have, and pretty much it's a 5% fee on that loan, which is also net funded. And that's pretty much it on our loan programs. If you guys have any questions as I stated, please feel free to give me a call or shoot me an email. That's it for me.
I love it. You said, I'm gonna be brief, be bright, and get out the way. That's awesome. Okay. Now, this is the time for our audience to start posing questions to our panelists. So you can unmute yourself. I invite you to do so. Let's be respectful of the time. So we don't want to gobble up all the time on one question. If there are things that are very specific to your business, your personal life, feel free to reach out to these subject matter experts so that you can get a deeper dive into your particular situation. But if we've got some general business questions, let's get them in front of Ken, Andre, and Sandra. How about we get a thumb up or a wave if you want to go first?
Hi.
Yes. Desiree, was that you waving at me?
Yeah.
Okay.
I'm driving, but I'm hands-free. So I wanted to, I guess I'm gonna dig a little bit deeper. The third gentleman that spoke about the loans. I don't I just want a small loan to start out, because one thing I was discussing with my friends and business partners is, in order to run a business, we have to have our credit together, so that way we can have access to funds. And that's where I'm running into, because I got denied the EIDL loan. I don't necessarily want a loan, but a small one. He said, what, 500, like as low as 500, or is he saying 500,000 to, I don't know. Like
Yes.
what the figures that he's talking about, as low as $500 up to $350,000.
Yes, I'm sorry, Desiree. Great question. Again, our loans range as low, on the microloan side, our loans range as low as $500, and we can go up to $350 with the term in length up to 66 months, which is 5.5 years.
Okay. Yeah, I was looking for something small to start off with to build credibility and build my credit and business credit too. So I have some things set up so that way, you know, I can get the good scores and have access to funds.
Okay, that great. I tell you what you can do, Desiree. Don't hesitate to feel free to, I have my information shared in the chat. feel free to
Okay.
send me an email or give me a call, and I'll get back to you probably in about 72 hours.
Okay. Yep.
Thank you.
That works. Thank you.
All right, awesome. Somebody else give me a thumbs up on a question to pose to our panelists. Who wants to go next? Don't be shy. This is not the time to walk away and say, I wish I had.
Hey, Kim, this is Mike.
Hi.
Hi, quick question, right? So the guy before Kenneth that spoke, right?
Andre.
Andre,
Yes.
okay. Andre, hey, I had a question for you. So, do you guys, I know you talk about one of the loans, and I was wondering, if I'm doing a franchise, right? I just purchased a franchise right now, and I'm looking at a real estate building that I'm going to convert it into, right? Will you guys be able to come in with it?
Okay, so you're looking to purchase a piece of property for your franchise?
Yes, yes.
Absolutely. Yes. That's something that we would definitely look at.
Okay.
That's definitely something we would look at. Like I said before, we have a minimum loan up to $45,000 and a maximum up to $1.5 million. So if you're looking to purchase real estate and it's going to be owner occupied, yes, that's something that we would definitely take a look at.
Okay, definitely. I'll connect with you.
Absolutely. Thank you. Looking forward to hearing from you.
Bye.
Great question. Shannon, I see you unmuted. Go ahead and pose your question.
So it's just to actually piggyback off of the gentleman's question. So is that only in the Columbus, Ohio area?
That's for the entire state of Ohio.
Nice. Okay. Thank you.
You're welcome.
All right, I see wheels are turning. Any other questions? Andrew, Guy, Janae, Emmanuel, any questions?
Yes. Sure. I got a question for Sandra with DeHaan Insurance. Got a policy that's going to be lapsing, and I just wanted to see if it's easy to switch over professional liability insurance and general liability, or if it's through Hanover.
Yeah, so you kind of faded out there on the end. I did hear professional liability. So yeah, I mean, there would be an application for those kind of risks, but what kind of work do you do?
Engineering,
Okay,
professional engineering.
yes. So yeah, we represent several carriers who can do professional liability. I didn't hear the second coverage type you mentioned though.
It was general liability. I have a it's through Hanover, but I was thinking about, switching to a local broker. Right now I've got a company out in Chicago.
Sure. I mean, we can help. So we'd love to take a look at it.
Sure. Okay. I'll be in touch.
All right. Thank you. I wanted to ask a question and maybe elaborate for Andre and Kenneth. When the business owners are doing the lending, what insurance requirements do you expect them to provide? Or do you require any insurance?
Of course, basically, if they're going to be purchasing real estate, of course, you're going to need title insurance. And that's what I would say right now. As far as our real estate purchases, definitely you're going to need title insurance on those particular loans. I'm sorry, Kenneth, I didn't mean to cut you off.
Actually, Andre, you didn't. I'm sorry. I was actually thinking of the insurances that we require. We require, to answer your question, we require business liability insurance for any business, because we're asking that we be listed as loss payee on that business liability insurance. And then, there are some insurances that we may require for if the client runs a restaurant. We also want to be on the fire, the whatever other liability insurances they may carry, that they may need. Normally, you would get that if the loan is approved at the time of the letter of intent to finance. We'll spell out what insurances we need to be listed on as loss paid and the insurances that are required to close the loan.
Yeah, we've worked with some of your customers at ECDI, because one of the other insurance I think you guys may have asked is around key person, and we didn't talk about that, but key man or key person insurance just pays if you die while you're operating a business. So that's dollars that could be used to pay off that loan as well as protect your family, you know, if you're not there.
That is so true. That is normally required when we're doing a community advantage loan through the SBA. They do require that. I guess I'm going to call it personal or individual insurance, just in case a key broker in the company or key individual in the business, you know, passes away.
And it's just life insurance is what
Yes.
it is.
Life insurance.
That's the fancy terms for it, key person.
Good catch on that. I think Andrew had a question. Did you have something for us, Andrew? No, you're good? Oh, he got shy. Emmanuel, you lighted up there for a second. Did you have a question for the panelists?
Yes. Hi. Real quick question. One, Miss Sandra, I do videography and I'm looking to actually have some type of insurance for contracts in and out of state. What type of insurance would I need to do that to secure me and the contracted or the person I'm doing the work for? And I have a question also with the SBA. If I want to secure funding with a low credit score for a specific contract, I believe you had a contract type loan. Would that be based off of the contract I have with the individual company, or would that be based off of me having a contract with you?
Okay, so I understand the first part of the question in terms of what
Yes,
type
ma'am.
of insurance you may need as a videographer or photographer,
Yes,
right?
ma'am.
So the general liability, but also I think because you probably transport your equipment to different locations,
Yes.
you also you need property insurance or what's called inland marine, which really just says the insurance follows your equipment wherever it is. So those would be the two basic kind of coverages I would think it would be important for your industry. But I didn't understand the last question. So I don't know if it was for me or one of the lenders. But
It was for the third lender, but I do got one more question for you while I have you here. Being that I'm switching over from being just a personal videographer to a video production business, how would the bond contracts actually come into play if I want to do corporate for government entities?
Okay. So the corporation or the municipality who you're doing work for, they will let you know if a bond is required.
Yes, ma'am.
So,
Okay.
you know, I would suggest not securing the bonds unless you're required to get them. So they would provide you all the requirements and the limits that you need to carry if they require that to do business with them.
Thank you.
You're welcome.
And my next question for the SBA for me to contract loans specific individuals. Now it's for the last lender. If it's a contract I have with somebody that has whatever business, I would like to have a loan specifically to cover that contract. How is that obtained?
So I think you were referencing the capital for construction loan. And
yes, sir.
So you're saying you would have a contract to do photography, videography with
Yes.
this individual, with this company.
Company, yes, sir.
So what'll happen is that we would probably, what we would do is set it up to whatever that contract is. We can give you up to a certain amount, normally about 50% to get the project started.
Okay.
So when you are paid, that contractor that you are working with, they will pay you and us simultaneously to pay off the loan within 12 months.
Thank you. Thank you for that clarification. I appreciate it.
Okay.
And thank everybody too for coming in, because I'm learning to do this right. Thank you all.
You are so very welcome. Great questions, everyone. All right. Any other questions? Anything on your mind that we want to talk about while we've got the people in the room? Here's a question for Andre. Andre, if I want to take advantage of the state direct loan program, what's the process?
Call me. Just call me. Call me. Let's do it. Let's do it. Also, my work cell was not on the beginning of the of my screen, and I can go ahead and give that to everyone right now. This is my work cell. It's area code 614-623-0014. Again, 614-623-0014. And let's have a conversation.
Awesome. I love it. It's all about access, right? Now
Yes.
we've got names and numbers and emails with the people that can help us, get some of these financial and obligatory things under control and in order so that we look really good on paper while we're doing our best work to service our clients. Phenomenal, phenomenal. All right.
Also, one other thing, I'm sorry. You can also go onto the Ohio Development Services webpage, and there is a section for grants and loans, and you can look right there in the minority division, just to maybe check and see if you're eligible. But if you don't want to go that route, you can definitely just give me a call. Either one is great.
Fantastic. And if for some reason you don't have any of this information, you can't remember it, you can always reach out to MBAC and we will make sure that we can connect you to the party that you're looking for. Hey, Sandra, I see you want to talk a little bit about open enrollment. So let's give you some time to talk about healthcare.
Yeah, so you folks may know that healthcare open enrollment began November 1st and it goes until December 15th. And what that means, that's an opportunity for you to get health insurance if you do not have it. So it's Obamacare, the marketplace, under age 65. This window is important because if you don't get coverage during that window, you may not be able to get coverage until 2022. Okay, so it's huge. And the unfortunate thing is that there's not a lot of marketing or advertisement going on. You've probably heard that the Affordable Care Act law is currently being litigated in the Supreme Court. It looks like the justices are kind of favoring not to get rid of it or abolish it. But even if that were to happen, it wouldn't happen until 2022. So you still have an opportunity to enroll now to have coverage that would begin January 1st. The other important thing is a lot of people work for employers, and you as a small business owner may have employees and you currently don't offer health and group health insurance. We can work with your employees through Zoom. We used to do that physically, but through Zoom to help them get enrolled with coverage. And there are some programs where you as the employer can help do reimbursement. But from a group standpoint, if you want to offer group health insurance, you only need 2 people, 2 employees on payroll. That could be yourself as the owner and someone else. But as long as you're doing payroll and have payroll taxes, you'd be eligible to do a group health insurance plan, and new hires can come onto that plan. So we can assist you in that, but I think it's just important to share the information because somebody does not have health insurance. And we are in a pandemic and people need health insurance in a pandemic. And rates are low. Depending on your income, you can get coverage. I mean, we're writing people for $17 a month or under $100 a month to get health insurance. So I just want to encourage people to share that message. Because this is the window. We've got, roughly 3 more weeks to help people get it covered.
Hey.
Awesome. Go ahead.
Hey, Sandra, this is Mike. I'm happy of what you just spoke about. Now, if I'm hiring part-time workers, right, and I'm doing full-time, do I have to give these part-time workers medical insurance? And if I have to, where do I have to go?
So the Affordable Care Act law says if you have 50 full-time equivalent employees, that could be 100 part-timers or 50 full-timers who work 30 hours or more, then you have to offer coverage. They don't have to buy it, but you got to offer it. So if you have less than 50 employees, you're not subject to that requirement to offer health insurance. But if you got a lot of part-timers or you have full-timers where you don't offer coverage, I mean, they can call our office. We can work with them getting coverage through the marketplace.
Okay, all right, thank you.
Listen, my time is up and I thank you for yours. This has been a phenomenal workshop. Know that we are coming back to you on tomorrow and we're going to be talking about subcontracting and joint venturing. So I thank you to my panelists. You were phenomenal. Thank you for my attendees. And listen, I get to see everybody tomorrow. Thank you so much. Have a great afternoon. Bye-bye now.